JB here. Hope everyone's doing outstanding. Monday, January 12th, 919. Really quick rant. Talk about market. Some names I'm looking at go from there. S&P in the red. S&P futures off the morning lows, still off about a 0.5% here. I mean, would we have been red or in the red if we didn't have what's going on with the Fed? Who knows? But a very busy week. Tons of stuff going on, but we'll see how things play out. Just really quick, obviously, I'll get I guess the elephant out of the room, the Powell or the Fed's situation that's going on, where you have subpoenas and a possible criminal or investigation from the Department of Justice into the Fed on their construction, just much more clouds or uncertainty that's around them that creates uncertainty around the market. And to me, this stuff with the Fed and Trump and the current administration has been out there since at least the summer, and before that, even back during Liberation Day the markets were tanking. They were calling for the Fed to be very aggressive, and we all thought an emergency rate cut was on the table at times during the crazy couple of weeks in April. That never came to fruition. And then as the weeks and months progressed into the summer, there was still the back and forth. And then it's like, okay, Fed Chair Powell's term ends in May. We're only a couple of months removed from that. Let's get that out of the way. And who knows when this was all set up? Could have been a week or a couple of weeks ago with this Department of Justice situation. It doesn't have to be just over the weekend. But of course, a lot of these events come out over the weekend. Futures markets took it on the chin a little bit. And here we are in the red. And is this day going to be a red to green reversal? Is this going to be the start of a pull? And you have analysts, some of these folks come out saying, oh, this is going to create some concern that the Fed is not going to be an independent institution. But we all know come May, after the term is over, there's going to be a very dovish appointment as Fed chair that's going to be very aggressive cutting rates. So to me, I wouldn't say it's a non-event, but it's not like this changes anything, right? I mean, they're not going to just fire Powell and then cut rates next month. That's just not going to happen. The concern would be is he going to be pressured in two weeks and 2 days to cut rates. I don't think that'll be the case. My expectation was they were going to cut rates regardless, but right now the market's pricing like a 4% probability they're going to cut rates. But anyway, to see the market reaction, where we are, how the market has traded over the last couple of weeks, you have to think a lot of this is already baked in. So we'll see what happens. But again, lots of stuff this week. Earnings season kicks off tomorrow. We have CPI also tomorrow morning. Then Wednesday morning, we have PPI. We have retail sales data. And then you have the possibility of a tariff ruling on Wednesday. So that's a lot of stuff. And then you also, the JP Morgan Healthcare Conference, which is one of the biggest conferences of the entire year. That's going to be rolling on. So you're going to have headlines around that. So it's a very busy week. I always try and use this, the half glass full scenario, that if all this stuff is going on, it kind of takes away from all those headlines that have been filling up the vacuum recently. And most of those are bearish skewed, right? You have the Michael Burry calling, the bubble and all these other headlines that have come out over the last couple months to kind of fill the news and data vacuum. So to me, it's like they always say, like when you're busy, it keeps you out of trouble, right? So to me, when the market has a lot of headlines going on, to me, it's like it keeps the market possibly out of some crazy pull. Today's gonna be a big day here. I still think 686 to 693 on the SPY. That's a big range, big chop range there that I kind of want to see 686 hold on weakness. And then 693 might provide some resistance, but cautiously optimistic that we have a decent week this week. So that's kind of overall markets. You also have the backdrop of some other things. And I'm always, I did this, I don't know if it was Friday too, but I like free market forces in play. I don't like to see things that change free market forces. So now you have the talk of possibly cutting interest rates on credit cards to 10%. You also have the $200 billion in mortgage securities that are supposed to be purchased last week. Those all kind of like create these anomalies and things that are not natural forces, right? And that creates, to me, that's the thing that creates concern. All right, so that's overall markets. Just quick on some individual names. And, first, Pool. I was looking Friday. It's a name I've traded over the last couple of years as like one of those. I think it's a great play. And, back in COVID, I thought it was a great play. And it's kind of like struggled. And then even, the 2013, 2024, 2025 was kind of okay. We're in a high rate environment. It's not the best for a name like that Pool. For Pool to do well in, and now rates have started to. So the play would be okay at the end of the year. Last year was going to slide. I tried to play Pool for upside in the summer. That didn't materialize, and if it did the opposite of what I thought it would do, it went from the 320s all the way down to the 220s. So started 2026 in the 220s, and it's been bouncing. It's some of these oversold names have found a bid, but to me, I look at Pool and I see a 300 plus stock. Right, the market doesn't see it right now. It's trading. Well, it was trading at the 240s on Friday, but finally maybe some of these folks are going to open their eyes, and we'll have some other analysts jump on a bandwagon. Bard this morning upgraded the stock to outperform. They did have to lower their price target because I think the price target was like 345, knocked it down to 320. But maybe this is the kick it needs to get going. Got some of those Lotto 270s on Friday. I think the stock was 246 or so. And the premise on that, and thinking it's only a week to expiration with the stock being $20 out of money, is like, I don't need it to get to 270 for the calls to pay. They were 15 cents, right? They were Lottos. Probably the best example of a lotto. I just needed to get to the 255 or so. And here it is, 257 at the pre-market. It goes to 260. Those might be $1 plus today. So the plan will be to lock some of those in. I might look to roll into 300s, into in February for play into the 300s. The issue with the February strikes, the spreads are wide. I've talked about this too. The increments are tough, $5 increments. So it makes it tough to find a decent risk reward strike to trade. 310s look interesting. So if I can get a fill on those, I might look to nibble some of those. But finally, nice to see the pool calls finally play out. So that's the pool story. If you don't know the pool story as well, you have the Berkshire Hathaway stake. So they have nearly a 10% stake at $1 billion value, $1 billion position. So good stuff there. All right, so that's pool. Coco type Bollinger Band set up. My 60 strikes expire this week. Don't be surprised to add some calls there to play for that type Bolly breakout. I should have the charts up here. I apologize, but I don't have these charts up here. I'll try and get the screen going. Sir Robotics added some weekly strikes. Monster move last week. The stock is up 48% or whatever year to date. At some point, it's going to have a pull. It's having a pull here in the pre-market. If it does some kind of slingshot reversal where it goes red to green, maybe this is the week it goes to 18 bucks. Call me crazy. That's Serve. And then other names here, Sweet Green, similar to Coco. I'm still waiting for this one. Well, not waiting, but chart looks great. The thing with Sweet Green, it's trading right at its upper Bollinger Band as opposed to having a tight Bolly breakout. So it might be a little tougher to have a larger swing, but this has been upwards to the right. So good sign there. When I closed the January 750s, the thought was, okay, I'll get to February, just hold on. Don't want to miss a bigger move. And now I think maybe it's going to keep going. So don't be surprised I have more strikes there. And then some of these other names, RH Wednesday, it's got that ruling. So I got those spec calls on Friday after I closed some out. Maybe it trades over 220 plus. If I can get some out to cover cost, I will. And I think that's it. I'll be back on the audio later. Let's have a great day. Sorry about the quick rant. Rock and roll.